Happy Easter weekend, everybody, if you celebrate it. If not, well, eat some chocolate anyway. How can that be a bad decision in life? Well, there are ways, but markets are closed today, except for the crypto markets, obviously. So that gives us a chance to talk about gold, the star of 2025 and the past weeks. But the serious warning signs. Don't fall into the FOMO, the gold FOMO right now. Take a step back, look at the warning signs, and then we're going to lay out the strategy, what to do next in the gold market, because there's going to be a lot of money to be made in 2025.
Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month.
So when you look at the gold charts and charts of the gold miners, producers, senior producers, junior producers, you would say 2025 a hard year in the market? What are you talking about? Looks great. I'm making a ton of money. Yeah, we are. But obviously equity markets, dollar, bond markets, different story. The Easter weekend gives us the opportunity to take a step back and take a look at gold and see where we stand and where we'll go. So let's jump right into it. This is the gold chart. It's obviously, a hero start. It's also obviously a blow off top. So that's the very, very final stage of a rally. It'll be short term. It's not a trend reversal in gold, but it's happening. First thing we see is obviously the negative divergence in the RSI. Right? Gold price is going up in April, RSI is declining. Now, this is nice to have, and it gives us an idea that momentum is fading. It's not a good timing tool. The second thing we want to look at is, this is the 20-day moving average here. And look how far away we are from the 20-day moving average. And now just follow the price of gold and the 20-day moving average. And you see how we have always hovered around the 20-day moving average, right? This is the only time in the past year, and this is when we broke out, where we went really far away from the 20, and then as you can see, we came back to it with a consolidation over time. This is likely what we're going to look at, a small, I just keep going here so you can see what's happening, right? Every time we got away from the 20 really far, here and here, we went back to it. So we can expect this to happen as well. The question is going to be a quick correction, and how big will the correction be? So the first correction targets, obviously, if we take a look at this, going to be this area right here, and obviously this area around here. It will be more of a zone, but you get the idea. These are our first price targets, and as you can see, that's not a lot of downside. So I can see us just going to one of these two levels, probably the second one, because this is where the 20 is. And then consolidate sideways. I do not expect big sell-offs. Now, if we get a real big leg down in the overall market, we know that gold cannot escape. We saw this here. This is very normal for flash crashes and crashes. Why is that? Because everything gets sold. So think about it this way. You have big hedge funds, you have investors that are invested in gold now, that have now bought back Nvidia, the Max 7 stocks, and then the market tanks. They're going to have to sell their Max 7 stocks, but then they also want to sell the stuff that they're still up on, that they're in the plus. And that would be gold. And that's why gold gets sold off as well. So if that happens, then our price target is really this area right here, the old highs around 3,000, 3,050. So these are the zones that we're going to look at for the gold correction. Now let's take a look at the gold miners. And let's take a look specifically at GDXJ, the junior miners. Because GDXJ, the junior miners, and GDX, the senior miners, look pretty similar. And we see both of them gap ups, gap ups, gap ups, 3 gap ups in a row. That's usually a warning sign that we're overheating. Island reversal structure right here, which is a reverse structure. Again, very, very far away from the 20-day, right? And you see the RSI very oversold. Now let's go back in time and take a look. And I pointed out the times of these horizontal lines right here. Every time the RSI was as oversold as we are now. And what happens afterwards? Correction. 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 Here we went up a little bit, then we had a corrective phase. Small correction went up, big correction phase. This is a really good indicator, as you guys can see. Correction. Here it triggered, didn't work. Correction came, but later after we had a run up. Here it worked again, correction. Here it worked like the charm. Went a little sideways and then we completely rolled over. 2020. Here it didn't work at all. So, this is all the way back to 2019. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times. 10 times the RSI was at the same oversold situation as we are right now. 8 out of the 10 times the GDXJ corrected afterwards. Pretty big. One time it went up a little bit, then corrected, and then one time it didn't work at all. So that's basically an 85% accuracy. That's really good. So this is something that we really want to pay attention to. And obviously we know that the junior gold producers have a high beta on the gold price. So if we think that the gold price is going to correct short term, not long term, this bull market will keep running for a long time. Now there'll be also long correction phases, but this will be running for a long time. Then the junior miners will correct a little more. What are the areas that we're looking at? Well, obviously gap fill area around here. This zone right here, which gives us like a 10% downside target. We would hit the 20, would get it back. That makes a lot of sense with GDXJ. So the question is then, all right, what do we do? Well, we have a bull market now in gold. We have a bull market now in the gold producers and in the silver producers. Not so much in the explorers. I told you this before. I've been warning about this and I went through my list yesterday of all the gold stocks that I follow, and it was most of the explorers were red, deeply red, and then the producers were slightly red or even green. Why is that? Again, it's a risk-off environment. There are not many things that are more risky than exploration in the commodity sector. It's money intensive to explore and build a project. Do you think that the money is flowing easily into the sector in this uncertainty, economic uncertainty? Not really. It's going to get a lot better because of the gold bull market, but it'll take a little while, right? So that means that the explorers are kind of stuck. the story, and we see it in the performance, is in the producers and some late stage developers. That's what we want to focus on. So we're going to use this time right now to do our homework, to find the gold and silver stocks that we want to own. And then we are buying the weakness, buy the dip. In the overall market, what worked in 2023 and 2024, buy the dip in the Max 7 and in the chip stocks. This is now the story for the gold miners and for gold. You buy the dip in the bull market. Two ways to do it. The rational ways, what I just showed you, you draw the lines. This is where an orderly correction would go. This is where you start buying the first third or half of the position. And then, and we're going to talk about this next week, what we learned in April is, well, if we're going to have a crazy leg down with max fear, everything gets sold off, the mining stocks will come under pressure as well. Therefore, we want to have some deep buying limits in the market that will get triggered when we sell off. This is what happened to me. I bought into a couple of silver stocks that I really like in the crash. Did I hit the absolute bottom? No. I bought a little too early. About 3 or 4%. The stock went down, or the stocks, it was multiple, went down afterwards. But you know what? With what happened afterwards, look like a genius now. So we're not going to be able to hit the absolute bottom with the deep buying limits that we want to put in the market. But we're going to be in the area of the bottom, and that's great. But we don't know if this is coming, and we also know that we are in a bull market in gold and the gold mining stocks. So therefore, we cannot wait for this, right? Buy the dip. So we want to start to get in regular corrections with our base positions, and then add to them with deep buying limits. And I'll tell you more about the strategy in the coming weeks, because 2025 is going to give us a lot of opportunity to scoop up the best mining stocks on cheap prices with the high volatility in the markets. Well, that's it for now. Now I hope you scoop up some great Easter meals, some chocolate, enjoy your time. And if you don't celebrate Easter, then do something else that you really enjoy. Life is short. Let's celebrate it. Bye-bye. Talk to you later.